you open up a can of worms almost as to the word impact. And I think that that's led to a lot of confusion in the industry. It basically opens a Pandora's box because it's about the individual and how they view impact. And if you just look at just a simple Oxford Dictionary, a word on the impact, the word impact, it says the powerful effect that something has on somebody or something. And so when you look at that word, you then can go and explore and unpack it a little bit more, and you can then start to think about, well, can impact be negative, neutral, or positive? Can the consequence be intended or unintended consequences? And so you start to think about the word and how loosely it can be used in the most generic context. And you start to get the shades of grey in there. And it's almost the case, if I put an example for you, what is the impact of having a cold, the common cold, versus a pandemic? So if we use that intensity factor, we can start to understand where the shades of grey can happen. And then when we start to look at the words impact investing, well, the GINS definition, which is the most worldwide used definition, is impact investments are basically investments that have an intention to generate measurable positive social and environmental impact alongside financial return. And there are some key characteristics and features of impact investing that are a baseline. And what tends to happen, and we will go through this in the market when we're having this discussion, is some features of investments display 2 or 3 characteristics, but not all the characteristics or not all the features of impact investing. So I might just stop there and let the others speak.
Thank you, Zarmeen. Yeah, please, the rest of you.
So, should I speak up?
Munib, we would love you to speak up. Please join. Please join.
So I'm going to drop a bombshell. I'm not an impact investor. What I mean by that, I'm an investor first and have been for 27 years who wants to make an impact. And this might sound like wordsmithing, but it's not. There's a very big distinction between an impact investor and an investor who wants to have an impact. And I think that's where we're coming from at Panarchy Partners. And I have, for 27 years before I started Panarchy Partners, I've always invested for my clients. I'm a professional institutional investor. I've always invested with financial capital at the center core of my investment philosophy, process, decision making. And it's taken me a while to realize that as an investor, you're actually vested in 3 other forms of capital when you're investing: human, social, and environmental capital. And once you have that mindset as an investor, then you think, okay, I still want to have financial returns, but I have also got to make sure that the impact that a company is having, either through its products, processes, people, how the supply chain is also impacting their other 3 forms of capital. And I think that's where the listed space, as opposed to maybe the impact investing, and again, I'm happy for Zarmeen to sort of correct me on this. Generally, there's this perception that impact investing is the space of the non-listed entities or non-listed enterprises or non-listed vehicles, as opposed to listed companies. Like when you think of buying SAP or when you think of buying Telenor, people don't really think impact. But as an investor, I am thinking impact. What impact are listed companies having on the 3 forms of capital? And that is very important. And that's why we have defined pan vesting, which means pan in all, and we're vested in all forms of capital. So by evolving ourselves from being just financially focused investors to all 4 forms of capital focused investors, we've become pan investors. And by doing that, we make sure that we not only get financial return, but also positive, incrementally positive impact by companies on human, social, environmental capital. So I think that's one way of looking at it as well, is impact investing versus investing for impact. Secondly, if I may, to finish off, I think for in the investment community, especially capital allocators, whether they be family offices, whether they be institutional pension funds, sovereign wealth funds, consultants for that matter, nowadays when they look at impact investing, they tend to see it as a separate asset class. My dream is that all investing should have impact, or minimize the negative impact and have positive, right? So when an asset allocator looks at impact investing as a separate asset class, they put it in a two-dimensional, somehow they put it into your usual capital asset pricing model, capital allocation line of risk and return, and therefore make it another asset class and stick it on that line. I think we should have a third dimension to investing, which is risk return with impact. And I think that's where we are looking at every single company and what they're doing, how they're making their profits, and what are the impacts they're having on the non-financial forms of capital. So that's how we are defining impact when investing.
Thank you. Thanks, Munib. I really appreciate that. And I love the pan idea of bringing all aspects together. And I think that's very much going to come out in this conversation as well at different times. Mac, I'd love to pass over to you around defining the word impact, as well as what the definition means for you.
Thank you, Fiona and Ram, for inviting me, and good to be here with everyone. So for me, anything that progresses the needle of the Sustainable Development Goals in a holistic way is impact. 7 million people were consulted over 3 years in the shaping of the goals, including the business sector. They comprise, as I think everyone knows, 17 goals, 169 targets, and very importantly, the 231 indicators. And the goals explicitly call on businesses to apply their creativity and innovation to solve our sustainable development challenges. And then when defining impact, it's also important to define how one measures it. So we know that there are a number of emerging frameworks, like the Impact Management Project, which we find very compelling. And, so Impact Management Project is one of a few emerging, but it measures, it specifically asks to say what contribution, both positive and negative, do you make to the 231 indicators, so that you're clear on your total holistic impact. So for me, impact investment is investing that progresses the metrics of the SDGs. We need consistent measurement of what is the outcome, who are the stakeholders, how much change is being made, how does it compare to what would have happened, and what risk has been created. That's me. Over to you, Fiona.
Thank you so much. And it's actually great to get a varied aspect of where we're pulling our definitions from, how they impact us, but also where they're coming from. And I guess part of my then lead on from that would be how the industry and how individually we're getting those definitions. Because as each of you have already touched on, we're pulling it from different resources. But as we also know, the word impact has got this massive definition itself. How do we then pull together and really be clear on the definition, not only that we're taking, but how do we get to that definition? It's great we've got industry bodies that lead the way. And so part of my question may be towards Zarmeen to begin with. When you're looking to get a definition, how are you taking the scope of what's out there? And at what point is there potentially some change, or does it adapt? Or how do we actually continue to make sure it is impacting and it's not being derailed or over defined? Because I think one of the aspects of impact investing is, where is the clearest definition coming from, and how are we getting that? So Zarmeen, could I ask you, how do you get to that definition point? You touched on it, but could you elaborate a little bit more?
Sure, and I think Mac touched on, the Impact Management Project. Let's take that for example. It did the method, I suppose, of getting to a certain framework that that's being referred to, took a collaboration. It took a peer-to-peer. It's taking so when we're looking at the definitions that are coming out of various industry bodies, they are not just making up bespoke, this is what it means to me, because it'll mean different things to every single person on this call. So the global community is taken into account, collaborations taken into account. We're talking about an ecosystem approach. So GIN, for instance, yeah, it is the leading peak industry body, you know. It's worked with the Impact Management Project. So how did it come together? I think that there was over, 800 organizations from non-for-profits, social sciences, research, policymakers, investment community, asset owners, asset managers, non-for-profit, the whole ecosystem to come to some sort of basic understanding, a baseline of what that definition meant. And this is what we're seeing, that within even the frameworks that we go, this is what it may mean. This is the broad generic application. And then we have all of the other bodies coming. IFC, Impact Management Project. Impact Management Project, I think, took 2,000 organizations to create it. So it's very much not taking a silo view of one organization saying, here, this is how I want to define it. So that's the difference of how we get to a certain definition, with probably the academic research rigor behind forming definitions. And GIN, if you look at GIN, and I'll just use GIN as I'm not sort of promoting it, it's just that it comes into play with the IFC principles, it comes into play with IMP, it comes into all the other industry bodies, UNPRI. So they are all playing together. And I suppose the use case, how do you use that definition? How do we start to think about impact investing? Well, you have to have an intention, you have to have the principles. So, okay, let's go to the IFC. Once you get to the principles and understanding, okay, well, let's define it. Let's get to a philosophy. We're going to use impact, as Munib said. You know, he's going to use his heart and then execute through his head, right? SDGs, providing a direction for people to say, this is the direction that the whole world is working towards. We've then got strategy. Well, if we want to create an investment strategy, we have to start somewhere. Same with the impact strategy. So let's look at IMP. When we start look at measurement, let's look at IRIS. Let's look at the various other spin-outs that are coming along to help. If it's climate, it's got other bodies. So I think if you look at the cascading, the definition sort of is at the top, and then the confusion is coming about because all these frameworks are coming about, but it's the use case. Where are you on your journey? If you're a deep impact investor like Munib, he may be using some very different metrics. So he's right down to the measurement side, right? If you're just starting your journey as a foundation and you're saying, this is my mission, but my investment is so different, you're going to be starting to look at just the high level, principles and the framework and the IMP, for instance, to help you start thinking about things. So I think the common trait is that we no longer believe that these big, hairy challenges can be done by one organization, by one industry. It's saying, let's get together. You can see it in this pandemic. Let's get together. And that's what the impact investing community is doing. It's working differently by this ecosystem approach and bringing everyone together to form a common understanding.
So, Zarmeen, I have a question for you there. Part of this whole different definitions across various industry bodies that you just touched upon, is there ever going to be a consensus, or is there already a consensus similar to the gap accounting standards that accounting firms and listed companies are currently complying to report the performance of a company? So is there some sort of a framework to that effect actually evolving across various of these industry bodies? And can we see something like that coming through any sooner? Or do you still believe there is significant gaps in defining and forming that consensus across, say, 5-6 different industry bodies you just mentioned?
Great question. Let's take the gap. Let's take IFRS, the International Accounting Standards. How long did it take us? How long did the accounting bodies actually take to get to one standard? It took like 20 years, guys. So we are just, the SDGs just came out 5 years ago. gave us the world the direction. It's celebrating its 50th anniversary. So people are still very much at, I mean, we saw the polls at this instance right now. People are still at the slightly aware stage or unaware stage. We've got to get them to this interested state. We've got to get their learning up to be at the same par, to be able to have a good conversation, to be able to harmonize. So I think that we've got some way to go. I think that we're still trying to explore how does real world problems translate into the investment world. We've got I do see, and we will talk about it later on, but we do see issues around how can you quantify, what's the base metric? So with the accounting standards, they're numbers, Ram. So how can we say a human life, let's say, look at health. The vaccine is going to help cure or, prevent this COVID-19 and reduce the health rates. How are we going to quantify it into one solitary number? It may not be able to be done as easily as, say, the environment, where you can actually measure carbon, where you can measure water usage. So some metrics, and I think the S of the ESG, if we think about it that way, the social aspects, there's the social science. It's a real science. It's been there. You can go and study it. So we're trying to, from an investment hat or a Western hat or the lens that we are all coming with, we're trying to get this one number, and I just don't think that that's possible. I think we need to have a very open mindset to say, if we want to tackle these big, hairy problems, we have to be humans first and have a broader mindset to capture the number, whatever that is. But the harmonization, I think it's a while. I think the netting, I don't believe in netting, but I think we've got a way to go. But I think that the community is building, and within these frameworks and these metrics that we want to measure, I think that there are some common standard ones. And I think that one of the key things here with this collaboration is the shared learnings. And I think with innovation, whatever we're seeing on the ground, that can feed back into an evolving and dynamic process. So it may not be in our fixed mindset, this is how the accounting standards were done. Why can't we get a social return on investment? Why can't we calculate it that way? So it's an interesting thing. It's about the human sciences on the S, environment's a bit easy, the governance, well, that's another issue as well. So
yeah,
Munib, Sure. Munib, at this point of time, maybe it would be interesting to see from a industry practitioner like yourself, how are you interpreting various of these definitions accrediting bodies like GIN and IMPs and others are actually creating? And from what I understand from Zarmeen's conversations, impact investing has a lot more to do with qualitative frameworks than accounting standards, which were primarily led with quantitative frameworks. So you as an investor, how are you actually balancing your qualitative quotient versus quantitative quotients?
Sure. So I agree with what Zarmeen said, that don't hold your breath for one accounting standard on impact. The first balance sheet that came out was in 1903, was US Steel, and GAAP came out in 1973. So 70 years, so we're still very early, very early. Now, the one thing that I do want to point out, and I think the risk we run when we're defining impact, and then especially when we're defining impact investing, people forget that at the end of the day, we are still talking about the word investing. And so when we are investing, we are investing, there's two stakeholders that are very important to us: the companies we are investing in and the people for whom we invest, right? We're just the middle person, right? And in that vein, for us, we get our definitions of impact not from any global standard. We get it straight from the horse's mouth. We engage with our companies because while these standards are developing, we cannot just wait for an external party, with all due respect to all the parties that are making very good efforts. We cannot just wait for them to define impact. So we go straight to the companies we invest in. We engage with them. We find out exactly the positive, negative. At the end of the day, what is this? This is all about externalities that have been outsourced by companies for the last 300 years. They're being internalized, and the positivity of that is coming through. Who's going to know it better than anyone else? Not someone sitting at the United Nations, head office. I can promise you that. It is going to be the companies who can tell you how much they can deliver and how quickly they can deliver without completely losing their financial sustainability. And the day we put in impact requirements that are so severe that a company loses its financial sustainability, guess what's going to happen? It's no longer impact investing. It's a charity, and that is where I think we have to become very smart and sensible that how to get the right definition of impact has to come from the companies, what they can do and what they can't do, and also the investors, bringing them on board as to this whole myth that impact investing leads to returns that are not that great. It's a myth. If anything, companies with purpose and companies who have got purpose, have had purpose, end up delivering better financial returns over the medium to longer term. Yes, if you want to look at it on a 6-month basis and compare it to the NASDAQ, well, you know what? It might not happen. But if you look at over 10, 15 years, proof is there. So I think the definition, going back to the question, is the definition of impact as an investor, waiting for global harmonization. We don't wait for that. We cannot wait for that. We will go straight to the companies and then also manage that with our clients, because clients can have a whole range of what impact they want, right? Some are really seriously impact focused. Some just want to make sure the externalities are minimized, and there's a whole range. So people have to manage that range with the companies that they invest in.
Thanks, Munib. Really great to hear your perspective on that too. And actually, from what we were just talking about and leading on, then the words and being acted on them, as we were talking about, it's about an ecosystem and all working together, each individually potentially having an aspect of what that means, but then also coming together to kind of analysing and saying, how are we going to use it in our own scenario, in our own case? We can't just take one body and listen to it and follow through. We actually have to adapt with it, and that's what impact is as well. It's about adapting to and growing with. And so when we envisage these words being acted upon, how have you seen, felt, or understood the definitions, the words? You just touched on, you've had examples of it. How have we seen these been acted upon? And potentially, Mac, do you want to jump in here in terms of like the human capital element of things and the impact in terms of, your perspective?
So the action, thank you, Fiona. So the action from words can be initiated by, as we know, government, businesses, or civil society, or partnerships within these. And just today, if we were just to focus on the action of business today and where to act, I'd like to share 3 exciting resources of where to look to act. So the first, for those who don't know, is the $12 trillion opportunity identified by the Business and Sustainable Development Commission. The Commission was set up for 2 years only to inspire and mobilize business leaders to align their companies with the global goals. And they've set out 60 opportunities. These opportunities are things such as product reformulation, dietary switch, carbon capture, telehealth, and all of them provide exciting commercial opportunities and investment returns, which progress the global goals and provide commercial opportunities. A second exciting resource to look at are 3 interrelated organizations called the Asian Venture Philanthropy Network, AVPN, European Venture Philanthropy Association, EVPA, or the African Venture Philanthropy Alliance, AVPA. And they create really exciting platforms to bring impact investors to come together. I believe that investors need to come together and pool together, and these remarkable organizations provide the platforms and help investors, philanthropists, etc., to come together and unite. And then a third thing is, if you're interested, for example, like I want to invest in climate change, for example, and climate action, another, I think, exciting resource, which is Drawdown. And some people say it's perhaps the best and most comprehensive plan written to tackle climate change to keep us within the 1.5 degrees C. They set out 75 solutions that are proven and financially viable. And I think, for me, these are 3 areas where businesses and investors can start using words to start acting on. Back to you, Fiona.
Thanks, Mac. Really appreciate that. And it's really great to hear these frameworks in action and some of the more in-depth details on them. And yeah, I think we can also look at what Munib is saying too. It's if we can't be sustainable in what we're doing, there's not going to be impact because we just become philanthropists. And I think that is a really important part of this. It's profits that come from purpose, and it's purpose that comes from profits. And it has to be that way. We have to be sustainable. And I think that we're in a positive place, that we can take models that were built not just to be impactful, but to create sustainable opportunities going forward for all. And it's about really focusing on how we can do that together in this ecosystem, not just with one definition, but as long as we have a direction in which we can move, then we're working towards impact. So I want to throw another question out there for each of you. And it sort of leads into the industry in terms of other impact investors out there. Munib, maybe you can lead us off with this as well, but how is the industry perceiving these words? Because I think, like you were talking about, we're talking about investing. We're talking about family offices. We're talking about, you know, people who haven't looked at impact as one of their main frameworks yet. And some people have. How is the industry perceiving words as a way in which they can still do their job and what they know and their work and their passion, which is the financial side of investing, and be able to interlink impact along the way?
So, Munib, just before you answer that question, so if I may just quickly remind all the attendees to keep asking your questions through the Q&A panel. Once we have a few conversations beginning with the panelists, we will ask those questions to the panelists as well. So please get the questions flowing through whilst we basically kickstarting the conversation. Over to you, Munib.
Sure. So the question is, it's how the industry is perceiving the words, right? Around
Yes.
impact, right?
Yeah.
The industry is confused, simply. The industry is trying to find out itself. And I'm not surprised. I mean, as Zarmeen had already pointed out, there is, unlike financial capital where everything is very quantifiable, everything is very measurable, everything is very mathematically, recordable. When you look at impact, I mean, even if you speak to, forget the investing community, if you speak to people on the ground who are actually the social entrepreneurs creating some of this impact, whether it be on the private side, or whether you even speak to someone like a Unilever or a Reckitt Benckiser and speak to the sustainability officers around what kind of impact they are having with their various claims of what they're trying to do on the social side. The one thing that they will all say is that they can see that there is input, there's output, but outcome of what they're doing is, there's a whole level of outcomes that can come from some kind of social investments that companies have made with an impact purpose behind it. Now that outcome, providing an example, what I mean by that is that one company has decided that they're going to go and provide hygiene and healthcare to 100 villages in let's say Bangladesh or India, and then the output of that is how many hospitals or clinics they've provided. But the outcome is how many kids survived certain childhood diseases, went to getting good nutrition, became doctors themselves, and therefore got out of poverty trap. Now that's an outcome. How do you measure that impact and then put it in a return on invested capital kind of framework? You can't. So I think the industry itself, the investing industry itself, is just coming, and I go back to this comment again, that moving away from a two-dimensional risk-return framework that we have been taught from the 1970s, 60s about the capital asset pricing model, courtesy of all the financial gurus then. We need to sort of break away from a little bit of that. And we need a third dimension, which is impact with purpose, and I've been sort of mulling over this as well. So I think the industry is not going to come up with a clear, and which is fine. The industry has space. There's enough asset allocators, enough investors, enough, impact opportunities out there on a whole spectrum. I think it's in as Donald Trump says, it's beautiful, it's great. We've got the whole spectrum of what we want to do. It's a matter of everyone choosing how far they want to go down that path. So it's a hard one. The words will always be a bit nebulous in the industry. If we're expecting the same kind of clarity as we have in financial markets, financial statements, we're not going to get that. And waiting for that, I think is just not the way to go. We shouldn't stop and wait for that. We should continue and learn on the job.
Thank you, Munib. Really appreciate you you coming in on that one. Zarmeen, do you have anything to add to that question?
Yeah, I think that confusion in the industry, I suppose I've just had 3 months of market intelligence that I'm doing on the ground from an industry perspective. I mean, as a practitioner myself, I already know this, but getting the evidence of the terminology, etc. And, you know, if I had to think about it and put it into a succinct phrase, we've all heard the phrase, beauty lies in the eye of the beholder. Let's change that to impact lies in the eye of the investor or the beholder. And so when you start to look at that, and it's a really powerful, you know, way to look at things, you know, the investor, let's look at the investor. Munib, he says he's an investor. We heard Mac say venture philanthropy. They're both investors. They're just focused on different things. Philanthropy is focused on impact returns. Investor, the traditional investor, is focused on investment returns, but can meet and marry, right? So yeah, it really has to depend on the investor lens that you're wearing. And then when you look at the corporate level, which is different, that's at the investee level or the corporate, we are seeing, you know, the shift from a shareholder, you know, the shareholder capitalism to stakeholder capitalism, right? Where they're actually seeing that outcomes. What is the corporates are looking at the social license to operate. We are seeing you can make good money and do good. As Munib said, there is a myth out there. All the Dutch pension funds and Nordic funds are actually investing, doing well and having market rate risk-adjusted returns. And yes, we do have to shift the modern portfolio theory, if you like, to have the triangular, and it's a common thing now that's coming out: risk, return, and impact. And I think that yes, there is that confusion, but what I'm seeing in the industry is the need to be black and white. It's not, because it just isn't. It's like if I put the color black and a dot of white, it's going to be dark gray. And if I put too much white and a dot of grey, it's light grey. And so if you look at A2 milk is a classic example that comes across in my, you know, speak all the time. If I'm an investor and I don't have any screens of ESG whatsoever, I look at the price to earnings ratio and it's, you know, telling me whatever 40 times, it may be overvalued, and I may not pick it. Or I may pick it, it's undervalued. Now, if I start to look at it through an ESG lens, as an investor, I go, oh, wow, I'm looking at the MSCI index and the ESG rating on A2 is looking pretty good, but it's got a controversy risk. And the ESG rating or the ESG metric may change my view on that investment. If I start to look at it from an impact lens, okay, I'm not looking at I'm looking at the financials are turning out okay, and I'm still now looking at an impact lens. I go, well, you know, SDG number 3, health and well-being, A2 is doing great, you know. And then I go, well, if I use my SDG number 13 hat, which is climate action, I go, but the dairy industry is causing so much greenhouse gases. So it's the lens that you look at. But what the impact is doing is it's creating a much more much more investment worthy look. So if you told me that the vegan industry is really coming up really strong, you would think that, well, just using a normal investment hat, that industry, it's going to have to change a little bit to you know, or the meat industry, or you know, any industry can be disrupted, so your valuation will may be impacted later on. So I think that as I said, I'm going to go back to the beauty lies in the eye of the beholder and impact lies in the eye of the investor. I'll leave it at that one.
Thank you. Really appreciate that. I think we got a really good aspect of some ideas of where mindset's at and how it's being perceived. And like you said, let's repeat that again. The beauty is in the eye of the beholder, and impact is in the eye of the beholder. And on that note, I'm going to shift the conversation just a little towards the importance of then changing mindset. Because as we've just been talking about, it's our perception comes from within. You know, it's what we're surrounding ourselves with, what we're looking for. And so that becomes part of the mindset of this, the skill sets and potentially the leadership that actually is needed to create the social change in the ESGs and in the impact space to drive this conversation in towards what it really looks like. And that's not necessarily just one, like we said, one definition, but actually how important is the change of mindset towards that? How important is this for human capital, but also for the idea of impact investing as whole? Now, if it's okay, Mac, I'm going to throw it to you for this question and leave the floor open to you for just now.
Thank you, Fiona. So we incorporate a systems thinking approach to our work. And when we try to tackle a really complex problem with multiple partners and multiple moving systems and multiple rewards, etc., we find it's really helpful to diagnose the potential levers that will really move the system. Some of you may know of the late Donna Meadows. She was one of the original thinkers of systems thinking. And she wrote a really powerful piece about the interventions that she believed make the biggest difference. And she concluded the biggest three was: number one, changing mindsets; number two, changing the goals of the system; and three, enabling the power of self-organization. So mindset is the shared ideas in the minds of society. It's the great unstated assumptions, unstated because they are unnecessary to state, everyone knows them. They constitute society's deepest set of beliefs about how the world works. So example mindsets could be: people who are paid less are worth less. Growth is good. Nature is a stock of resources to be converted to human purposes. One can own land. These are just a few of mindsets which some people will hold, but utterly dumbfound other people of other cultures. So in short, we think mindset is incredibly important in moving complex systems over. And if you believe Donna Meadows, changing mindsets is the most powerful lever that we have available to us. And you also asked Fiona about the importance of leadership. So again, we think leadership is absolutely crucial. To make our world safer and fairer, we believe we need our government, business, and civil leaders to see the world through what we think are 6 key beliefs or values. These beliefs are non-violence versus violence, fairness versus greed, responsibility versus apathy, truth versus inauthenticity, love versus intolerance, and partnership versus dominance. And until we have leaders in businesses and government and civil society who really see the world through these beliefs or values, then it's going to be quite difficult to make the world safer, sustainable, and fairer. So in short, mindset is absolutely crucial from our point of view, and leadership is also crucial. Over to you, Fiona.
Wow, Mac, before Fiona comes in, I just want to quickly reflect on those thoughts there. Continuing on the 6 different principles you just explained on changing mindset, where do you see in your conversations with leaders in the community that pragmatic, measurable shift is happening? Are you seeing that measurement, the shift happening from the patriarchs to the younger principals, if it is a family-owned businesses, or a shift happening because of the gender diversity being celebrated and better male and female participation coming up at a leadership ranks? Or is there a significant shift in the C-level executives actually perceiving active feedback mechanisms, like a 360-degree feedback mechanism, so that they take a stakeholder approach to change the mindset of the organizations?
Yes, it's a great question. I mean, so our opinion is that there are some big mindset shifts happening in the world. So if I could just quickly touch on purpose, for example. So as we go younger and younger in generations, the people coming up through those generations are, we believe, more purpose-led. So the people who, so millennials are more purpose-led than their parents, and as Gen Z, I think, are more purpose-led. So what we think is and so LinkedIn has done quite a really interesting survey on purpose and seeing that those shifts. So I think that's one thing. Another big shift we're seeing is the shift of old power and new power, and how these new dynamic systems are coming of people who don't have a head office and a CEO and a board are coming together. And I think that's a very exciting movement. One other thing, which I'm not sure you asked me to say, is how do you change mindset in the boards and executive committees of companies right now who are the old power? I'm not saying old in age, but it's a term, old power, who have the power and invested in.
Call the traditional hierarchy for that matter.
Traditional hierarchy, however you like it. So people often will say, how do you change the mindset of people to become even more purposeful? And what we talk about is give them disruptive experiences that really rattle and shake their sense of themselves and themselves in the world. And that's something that we love to do. So, if you're working with food executives, get them to really see the true cost of some of the things that are happening in the food industry and experience it very personally. So these are the things we talk about. Have disruptive experience that rattle and shake and inspire people to change their views of themselves and their views of the world. I hope that answers your question, Ram.
Thank you, Mac. Sorry, Fiona, I'm going to hijack for another one question here. That was very interesting insight from you, Mac. And I would be very keen to hear from Munib now in terms of actually interpreting some of these changing mindsets in your investing strategy when you're advising your clients. What are those changing pointers that you are looking for that Mac has just pointed out? And when do you actually get excited in terms of real behavioral change that you're monitoring, whether it is from the C-level executives or potential influence coming from the millennials, so to speak, within the part of the organization, which is potentially be investable?
Sure. I think you're right, and Mac's right, that purpose generally has to come from the top. It permeates, now the source of the purpose is from stakeholders, that comes from even the bottom, but it has to be led from the top. So the C-suite, the board, everyone, they have to have serious buy-in into it. And then the only way it percolates down, or at least from what we have seen, it is through actions. And we have, examples of that where various CEOs of companies, whether it be Danone CEO who has 30% of his long-term remuneration, all based on them becoming a B Corp certified and hitting their, let's say, GHG emission targets. If you look at the CEO of Train Technologies in the US, this gentleman is giving 30% of his salary to the Helping Hand Fund, which is their internal, for their employees, for any employee who's in a disadvantage or under a pressure circumstance for personal reasons, they can go to the Helping Hand Fund, which is an employee sponsored for employees, and the CEO puts 30% of his salary into it. Now, when you have actions like that at the C-suite and the board level, it percolates down very quickly into purpose and purpose into impact. And I think in a lot of listed companies, increasingly you are seeing that. Now, some people might turn around and say, oh, what Danone's doing or what various companies are doing is only because they want to get better revenue and market share from the millennials, right? Or the Gen Zs. I don't think the Gen Zs are that stupid. They know, they're very smart. They can see through, fake and fictitious, advertising. If anything, some of these companies currently, and I would say many of these purpose-driven companies currently are trading at discount to their peers who are not doing it, because guess what? Their margins for the short term are not being maximized because there's investment that is being made into human, social, environmental capital. And this is with the C-suite saying to external parties plus shareholders, we are doing this for stakeholders. And I think I like what Max said is that, and I hope he's right, that there's, if there's a silver lining to COVID, it's going to be, it has shocked the system. It has shocked CEOs. It has shocked boards. Now, with that shock, do we see more purpose coming through in corporates and more impact, whether it be corporations and therefore even investors? I hope so. So I think from every angle, we are seeing increasingly this whole move from shareholder capitalism to stakeholder capitalism, with the C-suite having to bring that into corporations, and with the Gen Zs of the world confirming that this is also makes sense from a business perspective. So all stars are aligning in the right direction, and they're all pointing on the same direction.
So I wonder what Zarmeen is currently thinking as an industry body here, Munib, if there is a potential heightened attention post-COVID, so to speak, for a call for an action on the changing mindset that is emerging to actually better define it. Zarmeen, is an industry view or an industry consensus in terms of potentially expediting some of the common definitions that can be made available for participants like Munib to start complying anytime sooner?
I suppose I'm going to sort of maybe not answer that question from the industry perspective. What I'm seeing at the industry perspective, COVID has certainly mobilized different types of investors to come together. And we are seeing more activity. We are seeing humanitarian bonds, blue bonds, lots of bonds coming out that are getting the different types of investors together to absolutely do something with their dollar to create impact. And what they're doing is they're creating a thread, a common thread. So an initiative, AVPN, as Mac mentioned before, GIN as well, they basically got together a response and said, any of the impact investors, whether you're philanthropy, whether you're a DFI, whether you're an impact investor, whether you're a commercial investor, come together. Let me know what the supply of capital is, and here's the deal flow that's coming, and we are going to curate almost like a capital introduction in our normal financial world, in the IB world, but we will convene deal flow and investors who are active in the market to catalyze and accelerate right now, right here, some of these things, because the COVID has done a huge amount of dislocation. So we're seeing blended finance transactions where it's a collaboration of philanthropy donors saying we will de-risk this transaction so other commercial investors can come in. Now, this is just capital stacking in the normal sort of finance world, but this is about different types of investors coming together, and they're using the impact thread. So they're forgetting about the definition. What is my thread, your thread? I'm on climate. Can you do something with climate? It's this cohort approach, cohorts from different spectrums of the world. And the common thread, and I think this is the important thing, rather than get fixated about the definition, they're just saying, are you in my tribe? I'm focusing on education. I'm focusing on gender. I'm focusing on something else. Let me find my tribe and let's do something together. And that's super, super exciting from an industry perspective. And we've got some data on that. If you go on the GIN's website, the R3 Coalition, Response, Recovery and Resilience. It's a big workshop convening that was happening in the Northern Hemisphere. We're rolling it out in the Asian Hemisphere, and it's getting this activity together. So I think that the impact lens or the thread is literally pulling together and threading us all together to make that pearl necklace. So yeah, that's what I'm saying. We're not hung up on the definition, because I think we've moved on from the definition, and we're actually trying to see, as an individual, me sitting as a board, I'm on the board, or me as an analyst, or me as a individual, how can I make a difference? Every step that I make, I need to do something different to create a lesser environmental footprint or a human, damaging footprint I don't want to do. So what is the legacy that I want to leave behind? So I think every single individual, whether they've got money or not, they have, through their actions, a big impact that they can make, positive, neutral, or negative, or negative.
Excellent. Thank you, Zarmeen. That is a wonderful way of actually bringing some sort of a conclusive remarks, so to speak, before we actually close. We do have just about 20 minutes left, and we have a pile of questions from our lovely attendees. Let's try and tackle some of those questions and maybe open up the floor for any of our attendees to provide any conclusive remarks once we try and handle these questions, so to speak. So let me just bring up these questions in no particular order. I'm just going through. Maybe I can start with a question from a representative from World Health Organization, Mr. Vinayak Prasad. He speaks about in the health sector, if we look at premature deaths, more than 71% are due to non-communicable diseases like heart diseases, cancers, lung disorders, etc. The interventions in tobacco control, reducing alcohol intake and reducing obesity, etc., can lead to a dramatic reduction in non-communicable disease in the medium term. How can we ensure these investments happen, as gains will only come in medium term, unlike, say, for immunization, water, or sanitization, where much of the investments currently are flowing? Who wants to take this question? I think question is basically around how do we prioritize investing in interventions of tobacco control and other causes, which are the primary causes for non-communicable diseases to take rise. Great question.
I'll have a quick stab, a little bit of it. Tobacco. We've got a lot of ethical investors out in the industry that are not investing in tobacco, so not trying to contribute to the negative impact. So that's one really big move. It's just as you know, the new divestment movements coming on fossil fuels. We do know that certain interventions, I mean, we need a lot more education around the linking between nutrition and all of these health issues. And we're also seeing, you know, the Robin Hood approach, where you can structure a health intervention, charge a premium to the people that can afford it, to then cross-subsidize, you know, a solution or a vaccine, etc., for the poor or the bottom of the pyramid. So I think we need a lot more innovation from all parts of the community, not only the investment side, but yeah, can't answer it too much further. Maybe Munib and Mac could. Hard question.
Munib, any thoughts?
Listen, on the tobacco, I think, as Zarmeen said, many investors are shying away from anything that has negative externalities, especially when it comes to the social license to operate is being lost, and wherever there are stranded assets or stranded businesses, they're going to find it harder to get more capital. So I think that is just a slowly removing that risk, that tail risk to society over time is going to go. Incentivizing people to invest in either drugs or drugs for non-communicable diseases. I'm not an expert on that. What I can say is that the listed companies that I invest in, they look to changing behavior. See, there's many of these things that I think we were talking about the non-communicable often comes from just behavior in eating habits and exercise habits and all the rest. And I think part of many companies that we invest in looks into exactly that are their products leading to bad behavior for your human health. And I think that's the way we look at it, is not participating or not being part of that. That's the way we believe we have an impact.
Wonderful.
Yeah, thank you. I might jump in here, and there's a question that we have here from Neha that I think most of us can answer, or at least can contribute to. So even during these testing times, when profits and return matter more than anything else, do you think investors truly believe in a concept of impact investing rather than investments that can generate better returns? And I think that's a really interesting question for right now, when we are living in uncertain times and we start to look at the bottom line, and sometimes we can be distracted from the idea of impact. So how do you both see that, or how do all three of you see that? Munib, will I, or Mac?
Yeah, I can go.
Thank you.
So for me, I think, and this varies across the world, but I think consumers are prepared, a percentage in each country of consumers are prepared to pay a premium for companies that stand for good. And it varies from country to country. So it's quite interesting. So China often will get really high proportions, and India will get very high proportions of their populations will pay for premiums. And some of the big clients that we're working with, you know, they have portfolios of brands, and some of which are more purpose-led and some are less purpose-led. And what they're finding is that consumers are going to the trust of the brands that that stand for good. So I think absolutely it is possible. And I think obviously from an employee perspective and an innovation perspective as well, if you stand for good, your employees will be more innovative, more loyal to you. And I think the whole thing all stacks up. So yes, I would say investors should be investing, truly believing in the concept of impact investing, especially in these times, would be my answer.
Wonderful, Mike. Any other perspective? Should we take another question?
I just to add to Mac, if we were talking about mindset and to shift the dial to even look at that third pillar of risk, return, impact, you cannot get anything bigger than a pandemic to change the human mindset. There is nothing bigger unless human extinction for the body to move, right? So we are seeing actually the pandemic actually really causing big shifts, build back better. You can hear it in the industry. Youth, millennials, members of super funds, you know, HESTA, CBUS, big industry groups really being impacted. And it's being heard that it's this bottom up and top down that's happening, governments coming together. So I actually, it depends on which community you are in, but there is absolutely a very big positive shift towards seeing how we can do things better with our investment dollar. We all can look at our banks, we can all look at our superannuation pensions and bloody well shift. So, you know, we can buy, you know, different things that are, you know, more greener. So we all have an impact. We all can do this action. So, you know, you can see the Black Lives Matter. People got together. You know, if you want to change the system, you all have to get together and be more vocal with your superannuation funds. Be more vocal with your non-super money. You know, when you're picking stocks, you know, the youth have really caused the volatility in the stock markets to go berserk because everyone's making a killing. You know, so if you're really thinking about that, think about, well, yeah, should I invest in Danone versus, you know, Afterpay or whatever it is. So I think that the pandemic, the universe can't give us any more bigger sign. That's all I'm saying.
Thank you, Zarmeen. That is very well put. I think if pandemic can't change human behavior, what can it change? Let's actually go for a master reboot, so to speak. So given the paucity of time, I might just take one last question. It's basically a summation of two different questions here. Part of the question comes from Harsh Gupta and part of the question comes from Giles Gunasekara from, Giles is from Global Impact Initiative and Harsh from Acuity Knowledge Partners. Combinedly asking, what is the future of impact investing in India and Australia? And following that, impact is driven by pension funds in Europe and high net worths and foundations in the US. So what is the future of impact investing in Australia and how is that actually being defined as we speak? So these are questions more region specific to India and Australia. Who wants to take that?
I can just quickly do a quick one on a little bit on India. People, the best investments, impact investments, are the ones that have been created by the people who suffer the problems. So if you're addressing the problem statement comes and then the investment thesis comes after. Social enterprise is thriving We have, and people are making money. And so I think that India is an innovation hub. It's a tech hub. It's got volume of people. It's thriving. There's impact. The impact investing community there is much more advanced than Australia in terms of its activity and the solutions. And sometimes what's happening is that some of these investments are actually inherently impactful, but they're not saying it's impact investing. They're just in nature, their DNA is an impactful investment. They may not be just measuring it, and you know, it's just that tiny little bit. But I think that India is certainly thriving, and venture philanthropy is coming in, and other impact investors are certainly coming in because, yeah, that's a really interesting space. They're just innovative because they've got the biggest problems, so they're going to solve it themselves, and they won't need they need the world to help. But they've got their own capital markets that will actually really thrive and blast us out of the sky. So I think that's on that front, and I might stop there.
What's going to happen to Australia, Zarmeen? You're back here. Who's going to rescue Australia when it comes to impact investing? When will the super funds join the bandwagon?
The super funds are interesting. They're going to have to look at their own investor base, their member base. And just like everybody, you know, Munib talks about his investors, right? You know, you have to think about, okay, how I'm going to deploy, you know, 50% of their asset allocation is in equities, right? But the rest, private markets, real estate, property, private equity, that all lends itself to impact investing because it's much more easier to actually measure some of the things that you can influence on that side. So green property versus a brown property, you know, so there is parts of the asset allocation that they can think about in an impactful way. But they've got that fiduciary duty, and it's about the ticket size, it's about the institutional grade readiness of the investment. The marketplace is broken and fragmented in lots of places. So, you know, a super fund can't invest more than 20% on the overall investment assets. So if it's the minimum ticket size, what, 30 million to 50 million at minimum. So you're looking at a fund size of 250 million before it can invest. So big infrastructure, social infrastructure. We talked about the blended finance. That's certainly where, you know, CPAS is doing great. First State is doing great. HEST is doing some things. They're moving along the journey. So it's like you can't push an elephant to run a sprint. You know, it's got its place, and I think that you know, it's going to be a longer, maybe a little bit of a longer haul, but they've got their peers that can actually do it, and we need also some policy changes as well, possibly some structural changes that it may need to be triggered. You know, and we've got the Green Deal in the in the Europe. Really facilitating more ESG and things like that. So look, I think it's a long game, and I think everybody around the table and on this call is actually a change leader. So we've all got the influence, and just got to keep pushing.
Thank you, Zarmeen. We are just about 7 minutes left before our scheduled time for closure. I thought maybe a good time for us to bring any quick conversations from some of the attendees. I believe there was an expression from both Damien from Social Suite and Stephanie Nash to potentially contribute very quickly if they can. And if anybody else would like to say a quick hello, please put your hand up and we will try and facilitate for you to make some quick comments before we close. I believe Giles also wanted to say a couple of things, but in no particular order. Can we start with Stephanie, please?
Sure. Thanks so much. And good afternoon, good morning, everyone. I'm an HR leader based in Singapore, and we have a platform called the Thrive HR Exchange, which is for HR leaders and people leaders to share ideas of inspiration, innovation, to facilitate the future of work. And one of the areas that we're particularly focused and interested in is in the area of board governance, but also sustainability. And so there's a lot of correlation to what we've been talking about this afternoon. And I really appreciated the comments from the panelists And I'm almost replicating what Zarmeen said as we think particularly about the measurements related to human capital in this overall model. And Munib, who mentioned how long it's taken to get to accounting standards. One of the areas of opportunity for us in HR and in human capital is to define a set of metrics. And for those metrics to be well understood, firstly, becoming aware within organization that there are metrics and accountabilities related to human capital, what those measurements are, how in organizations we're going to align our people, processes, and systems to understand those metrics, capture the data, and be able to report upon that. And for our leaders and our people to understand their accountabilities and their opportunities to contribute to the movement of those metrics. And I think we're clearly at the very beginning of a journey. I hope it'll take us a far shorter amount of time to get to some standards and having a common language and a regular communication on this topic. But I certainly would encourage us to continue the discussion, particularly from my vantage point around the human capital aspect of what we're talking about today.
Thank you, Stephanie. That is very interesting. Obviously, all this input is required for us to move a needle in this space. And on that note, I believe Damien from Social Suite has got a very interesting technology proposition through which they're actually solving some really interesting ways to measure impact, so to speak, mainly for the family offices and foundations that family offices represent. Damien, maybe if you want to quickly comment on how Social Suite is starting to make a bit of a change in this space.
Yeah, absolutely. Thanks very much. It's been really great to see everyone speaking. There's definitely a few familiar faces there. We're Social Suite. We're a technology platform that essentially can take any set of metrics to measure the impact across stakeholders. So essentially, we measure the S in ESG, and we've just closed a $2 million round of venture capital because as everyone here agrees, the space of impact investing and measuring impact is quite nascent. And it's been really good to see so many great people and great comments about it today. And someone who's been working in sort of social return on investment for many years, it's just been really good to see everyone coming together and putting forward some very good ideas. So I look forward to connecting with you all and continuing the discussions.
Thank you, Damien. So look, I think we don't have way too much time left. We have just about 3 minutes and something that we would just want to make sure that we finish it in time. So may I quickly make some closing remarks and also invite my co-host Fiona to basically say her piece as well. So I think today is a humble attempt from both myself and Fiona and Forming Impact and TAT Capital as organizations to actually start defining, and I believe I hope we actually found some sort of a consensus in terms of definitions. The key takeaways that I have here is, whilst we're waiting for the big boys in terms of industry bodies and multilateral agencies to actually start putting some sort of a standardization and frameworks in place, there is a lot of moral conscience and behaviors that leaders in each organizations or boards representing these investment committees are basically now acting as guiding compasses to make those investment decisions to provide a social return or provide an impactful return, so to speak. I think that is one of my key takeaways. And next big key takeaways that I've seen is changing mindset is not going to happen unless until we as humans actually react to those changing thoughts that is coming across our mind. Something that something that I deeply value. Changing mindset is all about changing your thought process. Unless your thoughts start to evolve and move towards that a conscious world where you start to basically align your conscience with the wider consciousness that is existing around us to create a social impact, we're not going to get that. I think that is where our next webinar is going to be focused, which is the actions that one should take to promote impact investments to remain high on the agenda of everyone's thought process. I think unless until we actually move towards creating those action items, this will remain as great conversation piece, and we will not be able to bring more and more people into this ecosystem who are still sitting on the fence to participate in this wonderful journey of profit with purpose. So with that remarks, over to you, Fiona.
Thanks, Ram. I won't say too much. We're on the hour here, or on the 90 minutes, I should say. But you touched on very similar points than I was going to make. So I just actually wanted to bring two words, and that was intention and principles. So they were two of the key words that I really took out of today, because I think those two words can mean so many different things, but we really each touched on those words throughout this conversation. And it's with those words, as Ram just said, that we can lead to action. And it's with intention that we can be actionable. And it's with these definitions that we can then create our intention, and we choose what that intention is within ourselves too. And as we're all human, and as we're all slightly different, and as we all read and see and vision differently, our intention will not be exactly the same. But if we all have some principles in place that help guide us towards that intention, we'll at least all be on a similar path. And so on that note, I just want to say thanks to everyone who has participated. Zarmeen, Mac, and Munib, I really appreciate you being here. Ram, it's been a great start and kickoff, and I'm so pleased to have you as my co-host and to be doing this with you. But also to everyone who's joined the conversation from around the world today. It's not just one location, it's not just one type of industry, it's not just one person, this is a global aspect of what impact and impact investing is. And so to be able to actually capture thoughts and people from around the world, it's an incredible space to be in. Impact as a strategy and actionable agenda for the next conversation will be in November 10th. We are just deciding and confirming on global time zone to try and get some of the aspects to work on many different time zones. But I just want to say thanks again. Next time we will also be talking a little bit more about social enterprises who are actively utilizing this aspect of investing, and also speaking with some company case studies such as Panarchy partners who actually have worked with Munib and seen how it can work as being someone who's taken on impactful investment funds, and seeing how that can work on that side of things too. Without we can have words, but without action we have nothing to deliver. So that's the next step. Thank you all for being here. Really appreciate each and every one of you, and so thank you very much.
Thank you all, and put a placeholder for November the 10th, and look forward to chatting with you all again.
Thank you guys. Bye-bye.
Have a wonderful Tuesday. Bye for now. Thanks everyone.